The following is a presentation of TFNN.
This story began on a nice Florida winter day, December 10th, 2005, when a lone fisherman in Mosquito Lagoon, out near Cape Canaveral, discovered a crab trap that appeared to have something caught inside of it. As the fisherman looked closer, he noticed that a baby dolphin was tangled in a rope that had cut off the supply of blood to the dolphin's tail. The fisherman cut the rope and called for help because he saw this dolphin was struggling. The dolphin, later named Winter, was brought to the Clearwater Marine Aquarium, but too much damage was done to her tail, and it could not be saved. Now, folks, the greatest gift you can give anyone is the gift of your attention. And that is exactly what Winter received from a group of prosthetic engineers who created an innovative new design for a prosthetic tail. Winter, she's doing just fine, and her story of survival and success has gone on to touch others, many, many others. These are folks that need a more flexible prosthetic. We can't control the circumstances of life, folks, only how we respond to them. Circumstances are like the wind. Learn to set a good sail, folks, and let the wind take you to your dreams, your treasures, and your destination. Welcome to TFNN. We're glad you're here, and you have our attention.
It is now time for The Trader's Edge.
Hi, I'm John Logan. I'm filling in for Steve Rhodes today. Thanks for joining us. We're going to cover some stocks today. We've kind of done a continuation, I hope, from the first hour I did on the Global Market Pulse. And I'm going to review a little bit about the indices because some of you may be just joining us, but we're looking at our TAS market profiles that we look at on a daily basis, along with some other indicators that we use to try to get a biased opinion around those indicators. And we're looking at the theme for today is trade the reaction and not the action on some of these earnings stocks. So again, we looked at the NASDAQ and the S&Ps already this morning. Let's take a look at the Russell futures. I'm going to pull those Russell futures up here. And we're going to... And feel free to look at some of the archives on the show this morning if you want to catch some of the things that we've already talked about. But taking a look at the Russell situation, obviously it's a little bit weaker than the S&Ps. It's the Russell 2000 futures here. Unfair lows at 1134.38, and right now we're sitting at 1144. So again, the smaller cap instruments have not really led the way here on the wave up. We've had the NASDAQ and the S&Ps, and NASDAQ's pretty much been leading the way. So looking at our daily situation, we've got 1138 sitting here. I wanted to point this out this morning on the first show, but I just didn't have time. But I'm glad we had an opportunity to do that now. So 1138 unfair lows on our daily, which we've kind of already bounced off this morning, but we've got 1134 on our weekly. All right, so again, that's going to be something we have to pay attention to, and technical damage, so to speak, will have happened if we cross those borders. Now, we've bounced off those numbers this morning. We bounced right off of, as you can see on our 240. God, I hate it when it does this. Let me try to get this back where it's supposed to be. Oh, perfect. All right, so we bounced this morning, as you can see, right off that little DMZ that I talked about between 34 and 38, or 36 and 38. So, again, that provided some form of sanity here. As you can see, 34 unfair lows on our weekly, 38 unfair lows on our daily. That DMZ of 4 points on the Russell has really provided some sanity for a little bit of a bounce and a trading opportunity. So, again, as we look across the board and try to find trading opportunities, we're going to try to put risk-reward scenarios in our favor and wait patiently until these areas are approached. And the Russell basically proved that this morning, and that was a really good thing to wait for. So again, let's kind of move on now that we've covered some of the indices. Let's take a look at some of the things that some people have thrown out in the den this morning. I want to take a look at FCX, Freeport-McMoRan. And wait for that to populate. We've obviously, I think this is I think this is updated properly. Let me see if we got the same 37.69. Okay, on our short-term charts, we do have the correct price, but I think eSignal has not updated their long-term weekly and daily charts. So as we can take a look at Freeport, and considering this is a mining-related stock, we've got unfair highs at 35.73 on Freeport, on FCX that is. So that's ultimate long-term support. But as you can see on a weekly, today is Friday. This is another thing you have to pay attention to as we look at our information and try to analyze things. We've got a big orange bar here. Okay, what does that mean? That means that we're attempting to show new supply. So we're getting ready to see, upon a hint of a possible new profile appearing and locking in as of today. So that orange means that, especially on short-term time frames, if you're using our Vega indicator, which is a red light, green light type situation, that is very indicative of what happens within the signal box in general, that we're having a very brand new upgraded product on Monday. What we're looking at here is a possible new profile appearing on our weekly. And as we look back in time, we haven't had a new profile since November of 2013. So this is a pretty impacting event that may happen here. And as we look at this possible close today being Friday, and a new profile possibly appearing on Monday, we will have some new information and new long-term inflection points to be aware of on a long-term basis. And that actually is, let me look back in time. I don't see a profile that long that has happened and stayed in force. What is that? It's about 9 months. So again, this is, horizontally speaking, this has been in force forever, and a new profile will be very impacting to the stock, and we may see that happen. So that's something to be aware of, indicating by that orange particular bar. Here's our daily situation. We've got an intermediate inflection point to key off of today around 37.86, so that would be looked at as more than likely resistance on any day trading opportunities. And that 37.86 coupled with 39.18, that's kind of your DMZ of dig in on the short side, in my opinion, to trade against the long-term trend up, and maybe a new profile will actually help that out also. So when we see new profiles appearing, those are actually indicators in general, so to speak, because we're obtaining new supply and fair auction areas. All right, I hope that makes sense. Also wanted to take a look at VALE. That was something else somebody wanted me to take a quick analysis of. And again, we've got three things we can do. We can have a bias towards the short side, we can have a bias towards the long side, or we can have a situation where we really don't have a clear picture, and it may be better to sit on your hands in those types of situations. So taking a look at our weekly, this is VALE. We've got a big inflection point here at 1485 that's going to have to be contended with, and any closes above there, as you can see, we haven't had a close above that inflection point since, again, back in December 2013. So when we take a look at this particular stock, the longer you have profiles stay in force and the longer inflection points horizontally are spanning outward, the more impact those particular levels have on what's going on with that instrument. So this is going to be a huge resistance area that we have to close above on a weekly for this thing to start thinking about even going north again. So 1485, keep that number in your mind. And on a daily, we've had some trading opportunities in that particular fair auction on our weekly by way of closing above daily profiles and using those profiles as support. As you can see, support, had a little bit of noise there, breakout again. So again, we're coming back up into weekly resistance on this, and we're trading, I believe, 1446 as of the time of this report. So again, here's the 240 situation. I'm assuming the stock came out with earnings. I haven't checked that yet, but the technical situation, barring all earnings and fundamental factors, are what they are, and 1485 is going to be resistance. And I think we've climbed a lot, and as we're coming into this resistance, it might not be a bad area to start taking a look at this if you've been long, as the trade may be over from that side, at least temporarily, until we can try to figure out some new information on our weekly and daily, and we don't see any new information actually trying to appear here on this particular instrument. Want to take a look at PepsiCo. That's something else that that's something else that's obviously had some earnings-related action this morning. And remember, we want to trade the reaction and not the action. That's the smart play. If you're rolling the dice before earnings, a lot of times, I mean, that obviously is probably a 50-50 scenario. But again, you got to take a lot of heat sometimes and a lot of volatility. And if you're putting in stops, a lot of times those stops will be hit if you're doing things like that. If you don't put in stops, by the way, in my opinion, you're playing with fire. So again, we're trading 90.82 this morning is what I'm seeing. Again, some of these charts won't reflect that 90.82 yet because they haven't updated on a weekly and daily basis. But here's the scene for PepsiCo. We're obviously in the stratosphere up here. Here's the daily. Not a lot to key off of there, but remember, as these charts update on our daily, we may see some new orange bars appear, which would indicate a new profile, possibly with new inflection points to key off of. Here's the 240, and the 60 is actually, and the 240 are reflecting that short-term action. So again, we're kind of in a wait-and-see pattern on PepsiCo. I don't feel comfortable going long or short this instrument right now. Okay, so let's pull up our signal box here that we're coming out again with a new product, new upgrade on Monday. Allows you to, it's pretty self-explanatory, but again, it gives you inflection points to be aware of. And we're going to take a look at one of the things that I wanted to see. I'm just going to refresh this really quick. And I'm going to look at below the box in a multiple time frame confluence between weekly and dailies here. I'm going to apply that filter. So again, UTX, Qualcomm, McDonald's, Coke, Exelon, Caterpillar, all meeting that very weak criteria, along with some of the currencies and things that we look at. Cotton, gold, meeting that criteria. Some of the usual suspects on the futures world: soybeans, corn. So let's take a look at coffee really, really quick. Do one commodity here and get away from the stocks for a second. So as I look at coffee, and again, we're looking at a continuous contract that we've put in the synthetic area to try to combine some of the things moving around from the past. Here's the situation, and as we look at commodities in general, when you try to combine contracts, it's a difficult situation when you try to smooth out how commodities have acted in the past, because you've got to combine different products on different months on the same product, and it's kind of an exercise in mathematics. There's a lot of math formulas on the internet to combine rollover dates and things like that, but I think we've got this on our website or on the TFNN site. So as we took a look at coffee the other day, we were waiting patiently around this 175 area as we come up, as we said, we really can't think about going long this product, and it possibly would be even more of a short candidate around 175 into that 177 area. All right. Tell you what, I'm hearing the music, and we're going to take a small break. But make sure you have our phone number, which is 877-927-6648 for U.S. and international, 727-445-1044. We're going to cover quite a bit more this hour. Come back to see us. We'll be back in about 5 minutes.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details, and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, I'm John Logan, filling in for Steve Rhodes today on the Trader's Edge, and we're going to continue taking a look at coffee here. We're going to pick back up where we left off. Got a little bit of an echo here, so I'm trying to overcome that. Lost your DIN chart. Okay, let me put our DIN chart back up. Does everyone see that? A little bit of technical difficulty here. Just waiting. Okay. Okay, so a little bit of an echo in my background. I'm going to try to overcome that while I'm speaking to you today. Okay, so we're looking at coffee. Just to get back into that, let me pull up coffee. Sorry, folks, getting a couple of little echoes here. Okay, I think we're okay now. No, it's back. So I'm going to have an echo in my background here as I'm talking. Okay, so as we look at the situation for coffee, we talked yesterday in the day. Actually, what caller called in on Tuesday, I believe. His name was Steve. 175.42 are those weekly unfair lows, and on the daily, we've had a situation here where daily unfair lows were around 177.02. All right. So what we looked at was the breakdown on the weekly as we pull this back up. using that as former support, now resistance, coming back up into there. We talked about, with Steve, in fact, not being able to go long until we crossed those barriers and closed above, being the weekly unfair lows and the daily unfair lows at the same time. And that was kind of a DMZ of 175 on coffee into that 177 area. We've had that daily close, and now, as you can see, just kind of looking at how this works on this particular time frame, I'm going to blow this up as much as I can. We've got 177 sitting here, and as we closed above, we came back and used it as support. So right now, again, I think the trade may be, as we're within two fair auctions here and at the bottom of one on our weekly, may be on the long side as we've crossed those barriers with stops down below 175, based on your appetite for risk. Okay, so that's the way we're covering coffee, and that's the way we should look at it based on our rules-based environment and the ability to look at some of our shorter-term time frames, hopefully to get some biased opinions there. Okay, let's move back into the currency world for just a second. Let's take a look at the euro, because there's been a lot of news-related events on the euro lately. Not that we're keying off news events, but we're actually looking at things that may have some trading opportunities, and we're waiting patiently until some of these inflection points are reached. Remember, those are the high probability areas to place trades on, in my opinion, and we want to try to wait until the market comes to us for those type of opportunities and not chase things. So the euro provided a really, really good situation as far as breakdown potential at 135.52, and as you can see here, we're just trying to stay with the trade, so to speak, from the short side at this stage. As we broke down, closed below on our weekly, came back, retested, and again, that's one of my favorite situations that that can happen. Breakdown, go back and retest former support, now resistance. And as this particular instrument looked relatively heavy on a relative scale versus the dollar, even with that somewhat inverse relationship, it was actually a little bit weaker candidate than the dollar was, a stronger candidate. So this, in my opinion, was a little bit more of a high probability situation to get into. Here's the daily situation. We had the breakdown on the daily first. So again, something I think, trailing stops may be in order on this from the short side. And at this stage, I don't see a lot of reasons, except on a very short-term basis, possibly to be long this particular product. Someone's asked for me to take a look at wheat. Let's pull that up. I was actually going to look at corn, in fact, right before you said that. So I'm going to go into wheat. We're going to post that up, and we're going to break in just a second. So as this populates, as we get ready for this so-called analysis, we're going to take a look at the weekly first. Not a lot of things to key off there, I will admit. And it's been okay to be short, not okay to be long on a long-term basis, as you can see, based on profiles and no new information popping up. Wheat's a little bit different animal than corn in general. But remember, these are alternative feed substitutes, so to speak. There's a lot of grain buyers and producers around here, and I can give a little bit more cleaner dissertation on that when we get back from break. I hear the music, and what we want to do here is state to everyone that I'm filling in for Steve Rhodes today on the Trader's Edge. I'm John Logan. Here's the number, 877-927-6648. If you want to call in, have me do some quick analysis, please give us a call, folks. We're coming right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, I'm John Logan. Welcome back to the Trader's Edge. I'm filling in for Steve Rhodes today. I love listening to Steve Rhodes. It's always uplifting. It's part of my day now, actually. Hope we get some value out of what we're going to talk about. We're going to look at wheat. We've got some questions on what would it take to get long wheat. And again, I think I was referring to, this is the weekly situation on wheat, just to get right back into it. It's been okay to be short, not okay to be long since 681 on a long-term basis, okay? That's kind of been the MO here. And as we talked, wheat's a little bit different animal than corn. It's an alternative feed product. When corn gets too expensive, sometimes, we'll convert into wheat. Soy meal, in particular, plays a part of that equation, in my opinion. A lot of people have been long corn, short wheat as this thing has come down. And to some degree, that's not a bad spread to actually trade. Even though it's not a true spread, it has some relevance because of that connection between the feed situation. But again, wheat's kind of been holding up lately as corn's been still taking it on the nose. And we talked about changing pace on that particular spread about three weeks ago, actually, because of some of the things that we look at, which we can cover in another show, actually. The good news is you can look at profiles also versus spread values. And one of the cool things about eSignal that actually Daryl Martin was pointing out one day is that eSignal allows you to chart, instead of just line charts on spreads, actual bar charts on spreads. You actually get the bid ask and closes and opens on those particular spreads. So it's kind of neat what eSignal offers as far as that particular aspect is concerned. So again, to look at the question again, what would it take to start getting long wheat? Well, we've got a couple of different time frames we can talk about when we talk about what is it going to take to get long wheat. For short bounces, we're going to talk about that. We're going to talk about an intermediate trade also that may be appropriate. Remembering what I said, on a long-term basis, I forgot who asked that question. I can't. Their name is not appearing here, but for the user that asked about wheat, the best case scenario on wheat is if we could get a new long-term profile that would appear here, and we don't have anything yet. But on an intermediate basis, you might start seeing some of those green shoots, so to speak. And my goodness, as we look at this, as it's come down, we've actually been provided some trading opportunities on an intermediate basis and things to key off of and breakdowns, if you will, below profiles all the way down. Now, we had a trading opportunity the other day based on looking at some 240s and a new profile appearing and staying within that profile, and we actually picked a target above. As you can see on wheat, I'm not trying to pat ourselves on the back. We got very close to the top of that profile within a couple of pennies, actually. That was based on some of the things going on in the Ukraine. Because if you've ever been to the Ukraine or been to Romania or that Moldova, that general area, which my partner and I have actually been to, it's endless fields of wheat. I don't know what the alternative crops there are, but it is truly amazing. As far as you can see as the earth curves, we're talking about fields, silos. And I'm not talking about the newfangled silos. I'm talking about concrete bunker-like looking silos. And it's truly amazing the amount of wheat that's grown in that area. So we had a little bit of a kind of a disturbance, if you will. I don't think that fundamental news is actually out of the marketplace yet, but as you can look at wheat relative to corn and see how that spread is kind of reversed a little bit even before then, what's it going to take to start thinking about wheat from the long side? As you have noticed, we have not closed, trying to get this whole picture in place here, we have not closed above, on a daily, above profiles since, good gracious, let's go back to May of this past year. So we've been kind of in a profile trailing down, sell resistance type mode with a few opportunities to go along the ways on a short-term basis since May. We're going to be in August next week. So what's it going to take on an intermediate basis? We're going to start having to have closes above 545. That's the short answer. All right. I'm kind of long-winded when it comes to this because I'm trying to give you a little bit more information to take a look at this in general. But as you look at 545 on this particular contract of wheat, the front month, this is not December wheat, by the way. We're going to have to, have closes above there to start getting some confirming factors. And if we get closes above there, we may start seeing some new supply numbers on the weekly here. So again, on the 240, I kind of ignore this right now. Wheat's going to turn around. There's a ton of wheat out there. There might be some more fundamental news flashes that come out. But to answer your question, above 545, I would start thinking that you could possibly start looking at that as support. If you get stopped out, you got to take your medicine. Them's the brakes on trading. But again, be prepared to turn the rents the same way and get back in the game at times. So let's see. Seems like we've got a caller coming in. I hope that was understandable on wheat. I've got Victor from Paramus, New Jersey on ABX. Okay, so we're going to...
Yeah, but it had a secondary offering last year at 1835, and if you put the fibs from the high and low, it's hitting. Where's it going? From the high to low.
Is this Victor?
Yeah, it's Victor.
Okay, let me pull up ABX here.
Yeah.
And let's take a look at this versus what I normally look at, which is our profiles, right?
Yeah, then give me the profile on it, yeah.
Okay. Okay. Can you tell me, is this an S&P 100 stock or not?
No, it's a gold stock.
Okay.
ABX.
Okay.
It had a big secondary offering in 1835 last year, and it seems to be going back to that level.
Yeah. Okay. So the levels, and the reason I asked about the I didn't know if it was in the S&P 100.
Stock, though. I don't know. It could be though. No, you're right. Yeah, and expirations for gold are on Monday. So.
Okay. What we have here, the way I see it, is as we broke and closed above that 1777 area, if you can see that.
Right.
We closed above, we consolidated, we used it as a launching pad to obviously move higher. We have had no new profiles appear, nothing to key off of on a long-term basis, and 1777 is going to kind of be, it's either going to be support or Custer's last stance as it breaks there. That's the big key number that I'm looking at, all right? As we look, let me look at one more thing here. I'm sorry I didn't paint that picture well. Okay, yeah, that's the situation there. So 1777, and then we've got a previous... We've got a previous. Okay, when we talk about profiles, it's like an exponential moving average. Some of the profiles in the most recent past have actually relevance on the current profile. So when I look at the former unfair low on our daily profile, which is 1817, that's going to be a little bit of a flack there on the way down. We had our breakdown on our intermediate at 1869. So as soon as that started happening, you saw that technical damage start to happen in a larger way. There was a little bit of a whoosh sound there. I think 1777 is going to be, if you're looking to pick up more shares on this particular product, in my opinion, I think the trade may be to wait patiently until this thing comes down to a high probability area, i.e. that 1777 area.
Okay, thank you, sir. Have a good day. Thanks.
You're welcome.
Bye.
Thanks. Okay. Glad I could help on wheat. Thanks very much. I only see your code name there. I don't see your real name, so I'm gonna lay off on saying what your code name is there. Let's take a look at the Australian dollar. This doesn't have a lot of relevance in what's going on in global markets, but we always want to take a look at something that's looking technically possibly attractive. All right, so as we wait for this to populate, here's our weekly situation. We've got a new profile that's appeared as of last week, and those unfair highs are around 93.90. All right, we're sitting right there. We broke above, and we've come back down below, actually. So what I want to do here is we've got 93.99 unfair highs on our daily, 93.90 on our weekly. And as we look at this, we want to kind of point out that we're kind of getting back within profiles on the weekly and daily. So breakouts, and I know we had a kind of a fake out breakout there and then a reversal, but again, them's the breaks. You got to turn the rents the same way, play the probabilities. But right now we're back in profiles, and this is a wait and see game. I don't think I talk enough about wait and see or sit on your hands, but this is a situation where I think we sit on our hands for a little bit until we have a possibility of another breakout. Mike from Dallas, are you on the phone?
Yes, John.
How are you?
Doing this morning? I'm good, thank you. John, I'd just like to ask your interpretation of the corn futures market as we end the week.
Okay.
Today, and what your prognosis is, or
I hear you. I've been scratching my head a little bit on corn, trying to figure out. It's hard to sell things, as you know, just in the hole, and I'm sure you've been kind of thinking about that, Mike. I'm just speaking for you right now.
Sure.
And we're always looking for some reversal situations, because those reversal situations, as you know, can have some really good volatility and violence on the upside when they happen. Yeah. I'm currently right now in North Carolina, and I've got a lot of friends in the grain elevator business, and they are short futures, and they've been short futures because they had to be short futures, but they've also, because of the fundamental news out there, they have actually been over leveraging with their own accounts towards the short side, as if it was almost a free trade. That kind of concerns me from continuing to stay short, because there's just a lot of people in the short bandwagon, and there's been a lot of reasons to be fundamentally short. But right now, technically speaking, as you could see, that 435, 438 area, as we talked about on our weeklies and dailies, when that breakdown happened, I know we kind of poked our head below and then got back above, but again, them's the breaks when it comes to trading. There was a bounce opportunity there, but the clear-cut signs when we had that weekly close below, and I know that was significantly point-wise well below that 435, 438 area, but at that point, because of that weekly close that we had never had below those areas, at that point it was okay to be short, not okay to be long on a long-term basis. Right. And then very clear-cut sign there. Then we started looking for, as we see this on our daily, and again, I'm looking at that 438 area on the day, or 435 area on the daily that was broken below. But looking back before then, we had some trading opportunities as we came down and bounced that 435, 438 area and actually hit those unfair highs to the tick almost, as you can see there, around 452, 453. But I'm giving a little bit more education this week. I want to just talk about history a little bit before we talk about the current. As you see this coming up into these areas, and as you see it violently pull back off of that, if we had a crowding action or consolidation around those unfair highs, then I'd be more in tune to like sitting tight and waiting for a possible breakout. But we don't want to be at that level, is what it said. And we came back right down to support, and now that support is resistance on our weekly and daily. We do have and have had some new numbers appear as far as profiles go on corn, way down here. But we've never really been given on a short-term, intermediate-term, or long-term basis significant reasons to turn the wrench the other way, which would be to go long. And now we're drifting even below our most recent profiles on our daily, and that profile bottom right now on this contract is 359.5. We're trading 357.5 as we speak, and this is real time. All right, so the only way I would consider, and let me just drill down into another time frame here. Shoo. The only way I would consider, just by the rules-based things that we always look at, right? We are making higher lows on our Navigator, on our 240, and lower lows on price action. That's one good thing that is happening here. And as we make some lower lows this morning, we've got some higher lows again on Navigator. That's not a great timing tool. It just gives you reason, as I said, from a fundamental side, a lot of people jumping on the short bandwagon here as all the reports continue to come out, to look at this latest tranche down, if you will, with suspect eyes, right? So the good news is you've got an opportunity here. The green shoots may start appearing on the short-term basis, but if we can get back above 359.5 and close above 359.5, I think we may drift up a little bit. But the fact of the matter is barring a meteor hitting in Indiana and Brazil and the Ukraine at the same time, the new crop is kind of dictating the old crop here, and the new crop has been fantastic weather. There's plenty of corn out there, and I wouldn't expect a significant bounce if that bounce happens. Okay.
One quick question again. When you look at the current contract versus the next contract, the pricing, do you use the difference in those two prices as an indicator of what other people are thinking?
That's a good question. I think we have to, if you can hang around, we could discuss that when I get back. And we're going to have to take a short break. If you want to hang around, that's great. I'll answer it, and I'll answer it if you're not there also. So, Mike,
I'll let you answer. I won't be able to be here, but I'll listen to you.
Great, Mike. Thanks for calling in. That's a great question. I look forward to discussing it. We'll be back in about 5 minutes, guys. This is John Logan filling in for Steve Rhodes.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Hi, thanks for coming back. I'm John Logan. I'm filling in for Steve Rhodes for the Trader's Edge today. I do a show an hour before here from 8 to 9 every day called the Global Market Pulse. Hope you'll join me sometime. We're taking a look at corn, continuing to try to figure out the answer to the question at one point, could you end up nibbling on the long side? And we talked about that 359.5 area, and that would be kind of the close above there would be the first hint of being able to even think about this from the long side. So let me actually block something here that's popping up really quick. Thanks for bearing with me on that. But we also had the caller ask about, new crops. So that would be ZC4. And what kind of relevance does it have versus the current contract? All right. They're going to not always trade in tandem to any for any matter whatsoever, but sometimes, and we do have live data here we're looking at, what's the relevance of the current contract, which is the so-called active contract, versus the December contract. We can look at spread values between those two contracts, but they need to probably be considered a little bit different animal, because you've got corn available, so to speak, now associated with the current contract, and then you've got future situations that are a little bit more unknown, but again indexed to what you can either buy now or wait for later. So there is a little bit of a relevance there. Here's the weekly. I hate it when that happens. Here's the weekly situation. I did it again here. Let's try to pull this up one more time. Okay, here's the weekly situation on December corn, and those numbers on the breakdown completely were 444. So we couldn't be long. Okay, excuse me. It was okay to be short, not okay to be long below those numbers as we trailed down. Here's the December situation on numbers-wise. Bottom of the box profile lows are at 363. So again, having closes above there would just be a chance of a long situation with stops down below. But again, to answer your question, Mike, I believe it was, they're similarly related, but I think you need to look at them as different animals. And if you're looking at our signal box based on the front month contract, in this instance, I think you could have some relevance of both of those contracts having some kind of connection to each other as far as price action moving up or down. I don't think these are going to spread wide because we've got somewhat similar span of months here with a huge association in price action, as you can see based on the price action that has happened on this. So again, I want to close with one thing here. I want to take a look at the dollar index, because markets are now open. The S&Ps are open. Actually, let's take a look at the S&Ps for everybody just while the market's open here, because that's probably some of the things that everybody's looking at. And as we look at the S&Ps, we've had a little bit of a downdraft this morning. We're going to omit the dollar because we've got about a minute left here. Just want to get this in. Numbers on the S&Ps, 1969.50 unfair highs on the weekly that have to get breached to even start thinking about any long-term technical damage, a hint of it even. On the daily, we've got 1974. We breached that this morning. We come back above. And again, on a long-term sense and a long-term tranche up, we've got buying support, since this is by definition a long-term uptrend. But 1974, we poked our head below. That would have been somewhat an area to start thinking about a contra trade short side move. But again, we back up above, and those stops have to be hit in that instance. Bottom of the box on the 240s, 1974.50 at the same time. So 74.50 is going to be a big level that we have to stay below if we're going to do a contra trade south against the long-term trend up. Folks, you've been a great audience. I've been on for 2 hours here, and hope you've enjoyed it. Steve Rhodes will be back on Monday. Next, we've got the Bull Bear Option Hour with Daryl Martin, at 11, Basil Chapman with